Hi everyone, August Biniaz here with CPI Academy. I'm joined by 𝗖𝗑𝗶 Benesocky. Welcome, Eva.
Thank you, August.
We host CPI Academy YouTube show dedicated to adding value to our viewers' investment journey. We bring on experts to discuss all topics related to real estate investing. So we hope you enjoy this video. All right,
Wonderful.
great.
So we're going to welcome our guests today. We have William Rodriguez and Shaun Jones.
Great.
So welcome.
Awesome. Welcome, guys.
Hey, thank you. Thank you
so much for having us.
Of
Perfect.
course.
Perfect.
So Shaun and William, why don't we start off by you guys taking turns, and let's start by telling our viewers a little bit about yourself, your background, and your connection and interests to real estate investing.
Well, as far as myself, I've always liked real estate. I've been around construction because my father had his own business growing up. But I really got into real estate and more focused on it a few years ago when I met one of our mentors. So I'm a realtor here in San Diego, and our mentor in our business that we're doing right now, he was actually my broker at the time. He was my first broker when I got my real estate license. And I started talking to him about real estate investing, because he had been in real estate for close to a little bit over 30 years. So thought he had a little bit of knowledge. So he started giving me some of the ins and outs of what he's done and being a landlord and owning property. And then he told me, 10 years ago, I shifted into being the bank. And that's where we are here today. So we'll get into that later. But yeah, that's a little bit about me.
When you say broker, you're talking about your managing broker, the brokerage you're working at, the managing, yeah. We call them here in Canada, managing brokers, at least here in BC.
He was my managing broker at the time. Yes.
Great. Awesome.
Yeah.
Awesome. And yeah, from a little bit about me, actually I started working for a transportation company when I turned 19. And I was in that same industry for about 10 years. And I did sales, operations, handled accounts. I was even privileged to be part of a sort of division for a Fortune 500 company where I was responsible to grow the inside sales portfolio. So, I mean, my career was just, in a sense, taking off. I always knew that there was something else for me, just because I never really connected with that industry. It was always like, I'm going there, I'm getting the job done, I'm going above and beyond, but there's always something I'm like, you know what, like I could do something different. I just don't know what that looks like. Years after, I connected with a good friend and mentor, and this guy's really big on YouTube. He coaches a lot of businesses on how to grow their YouTube channel. And two things he told me in the very beginning. First is start making video now, right? The second one is get into real estate. At that time, I was like, okay, I know about the video. I started doing video, but I know so much about the real estate side. I'm like, I don't really want to sell homes. I see those shows, right? They're so exciting how people flip things, but I'm like, I don't know if I'm there, right? I don't know. I'm not really passionate for that. I actually met Shaun in Toastmasters, and that's when we connected. I told him a little bit of things of what I did and my experience, and then he just had started getting into notes. And that's when we decided, hey, how about we team up and we build something together? And that's how I came to Note Investing.
Amazing. Great to hear that background and how timing just works out perfectly for people to meet, and that synergy exists. So it worked out perfectly. Also, at times people, there's a lot of negative talk about negative conversation about W-2 kind of jobs or everyday jobs, but those jobs build a foundation and allow you to have systems when you do want to go into the private realm. So it's always great to have that background. But great, yeah.
So guys, I'm excited. So let's talk about note investing. What is a note, and what is note investing?
So yeah, I mean, it's complex, but it's pretty simple.
It's complex, but not complex.
It's complex. People make it complex.
Yeah, exactly.
So
that's what it is.
When you buy a home, you sign two pieces of documents: promissory note and a mortgage. Pretty much, you're telling the bank, "I promise to pay. If not, you can take back the property." Right? As soon as you buy a home, within a few months, you can notice that you're gonna get a letter from the bank saying that you have another lender now. So what happened is that the lender actually bought that in the secondary, sold that in the secondary market, right? They could sell it to other banks, smaller banks, private individuals, And that's where, for me and Shaun, our company, that's where we come in too. We buy those loans from those banks, hedge funds, and other individuals that create those notes.
Yeah. So in a nutshell, the note is actually what everyone is familiar with. When you buy a property, you owe someone money. So that's what the note is.
Is a certificate of the debt in a way, if I had kind of reworded it in a way.
Correct.
It's an asset backed by real estate, pretty much.
And for us here in Canada, looking over the border in the US and the subprime mortgage issues that happened and the financial meltdown in 2008, it was those notes that were given different kind of ratings, and then they were sold to different groups and different institutions, and which caused the issue. So there is a little bit of background here for understanding of what's happening there.
Yeah, and this wasn't available like, decades ago. It was only available a little bit over a decade ago.
Yeah.
So just because the foreclosure rates were over 20%, the
Mhm.
banks didn't have the manpower to foreclose on all these properties. And that's when everything was opened up to individuals like you and I. Before, you had to have, hundreds of millions of dollars in order to purchase a big, pool of notes, right? A big pool of loans. Now you can actually buy a loan as little as $10,000.
Mhm.
Obviously, they go up to the millions, but a lot of individuals could get into the note space now.
How long have you guys been involved in notes for?
I've been around it for about 2 years now.
Okay.
Just because of my mentor, Will.
About a year. Mhm.
So you mentioned the 2007, 2008 crash. That's actually what opened it up for other investors, because before there were large institutions, insurance companies. If no one knows that insurance companies invest in real estate, which are your insurance money, and wealthy families. That was the only ones that could play in that space. But like you said, in 08, 07, when the market just became overwhelmed, they had to do something, and they needed to open it up for other people because they needed someone to buy these things.
Mm-hmm.
Got it. That makes sense. And now you mentioned that notes historically were reserved for institutions when they come in and buy a whole bundle of notes, but now you could go in and buy individual notes for individual properties. Yes. And is there an assessment made on an individual note, even though that Mr. John Smith owes $100K on his property, but because the rating is low, or because he hasn't been, the property value has dropped, does that make it lower to buy that $100,000 debt that's owed to a bank? How does that aspect of it work?
Well, when the banks are selling those things off, they're always selling it at a discount. Whoever's buying is never going to buy it at 100% of what's owed on that note. So yeah, there is a level of assessment. We do look at the property value, because if the note is for 100,000, but the property value is less than 100,000, there's some risk involved there. So now we're looking at a discount that puts us under that, because in the case where, the homeowner, they're like, man, I'm underwater. There's no incentive for them to continue to pay for that unless they have a lot of equity in the property, or they put a large down payment. So yeah, there is assessment that we look at. We're looking at the property. We're looking at the area where the property is, because we're looking at that. If we do have to take back the property, can we really sell that? Can we sell that property?
Yeah, and we'll get to that portion of it. Let's just take a step back. So now these notes, is there a list that comes to you? Is there brokers you deal with? How do you get to see these the available notes on the market? Is there a marketplace for them? How do you come about?
Yeah. There's a lot of websites where people just go and you could see a lot of different notes that are available. I don't really recommend those sites, just because, from my opinion, you don't get the best value for them. For us, me and Shaun, what we've been doing is connecting with hedge funds and banks. We want to be able to tackle these in a larger scale. So instead of really pinching for pennies, we really want to get a good discount. And by getting a good discount, we actually have to buy them in large bulks, where it requires a lot of money, right? Which that's kind of the direction that we're going, right? But for the other people that would just want to get involved in this, you could go to those websites, you could go to the brokers that actually broker these notes out, right? You could go to private individuals that are holding a note, right? You could buy them on an individual basis. So it just depends what your strategy is, what do you want to do, and you go from there.
Yeah, and there's what we call note dealers out there that will sell notes. Sometimes when we get pools of notes, we know people that are looking to buy 1 or 2 notes to put in their portfolio or put in their retirement account. So, we also will do that. We help a lot of people that come to us with that as well.
And on that, is there other creative ways for you to find possible notes where you can kind of see if someone is late on paying their city taxes, and at that time contacting the actual homeowner to get your hands on the note from that avenue, or that's not something that's possible?
Well, you can't really get it from the homeowner. You have to go to the owner of the note. The homeowner is they owe someone else. So you can go to the county records if you want to dig through that and find out who owns the notes on properties that are late. So you'll see, okay, these properties are late on their payment. Who owns the note? And then you could try to reach out to them. It's a lot of legwork, but you can do that.
Got it. Great. And now, so now the note has been identified, or this kind of debt certificate, if I call it as. So now, what is the next step? The next step is now you guys have purchased the note, correct? Either in a bundle or an individual. Now, and we'll discuss about kind of if you could kind of syndicate this process, and Ava has some questions about that. But now that the note is in your hand, what is the next step? Do you guys what is the communication with the homeowner, and what are the steps that gets you guys take from there on?
Well, when we take on notes, we have servicing companies that we work with. They're the ones that are in communication with the borrower. They send out the monthly statements. They send out the year-end statements. They take care of all of that. The only time we'll reach out to a borrower is if we want to try to see what we can do to help them get back on track. Say, for instance, what we call a non-performing note. But even then, we'll work through our servicer. Sometimes hey, what do you want us to talk to this person about? What do you want? What are your options that you want to give them? We'll let them know, and they'll reach out to the borrower and work. And so we'll work through that. Because really, when we buy non-performing notes, a lot of people are like, why do you want non-performing? Well, because ultimately we want to help them stay in their home. We don't want their property. We want them to stay in their home. And there's always a reason why that happened. So that's how our process, we work through the servicing company that we bring on board.
Got it. Is there any time that a note is associated with a property that the homeowner has abandoned, or it's I guess is definitely non-performing in that case? And would you guys get involved with such notes? And if you do, what are the next steps involved with that type of property?
Yes, we would get involved with that for sure. Next steps on that, if it's abandoned, we still have to go through the process. So where we normally start, if we haven't had any communication with the borrower, then we will send out a agent or someone to maybe get an eye on the property. If they say, looks like it's abandoned, now we have to use skip tracing to find the owner. Because ultimately, if they abandon the property, that means they don't want it.
Yeah.
So now we want to do what we call where they sign over the property to us. Deed in lieu of foreclosure.
So let's discuss that. That's a very important aspect of it, because
you give an example of the story, the note that we're dealing with.
Sure.
Yeah. We're actually dealing with something right now.
So you guys become the bank basically, and at times, banks always try to work with, let's just call you guys the bank. Bank always try to work with the borrower because they don't want to end up with the real estate. They don't want to end up with having to resell the property because there's taxes and conveyancing and brokerages fees that are involved. So just like a bank who doesn't want that process to happen. Now you guys are at what point is a decision made to say that, hey, we're going to take back this property? And then what is the process to have the property transferred to your guys' name if the homeowner is nowhere to be found, if there's no contact? Talk to us about that kind of, I'm sure there's a court process it goes through.
Well, I'll give you an example. We picked up a note. We've had it for about maybe about 8 months or so. During COVID, it's been a little difficult to really do anything because the courts were shut, things like that. But through that process, we were starting the foreclosure process. We ended up finding that the homeowner had passed away. So Now we have to go to the next step and find out who the heirs are, if they have any children, wife, anything like that. So now we have to go, our attorney goes through the process through the courts of finding out if there's been an estate filed as far as for, to get the property or get any estate, any assets that they may have. Once we found out that there wasn't anything filed, now we have to see, are there any heirs? So once we found out there are heirs, now we have to serve them and give them an option to catch the property up and keep the property. So now that we're still just walking through that whole process, and our next step is, if we haven't heard anything from them by the end of this month, now we can go to what they call a foreclosure sale or foreclosure auction. Because when you foreclose on the property, you don't just immediately just take the property. There is still a process where you have to put it on the, basically at the courthouse steps to sell it. And we can get back any legal fees that we put in the property, the interest that they owed us, any back payments. So anything that's owed to us, that's what that property will go on auction for at that time. If it sells at the auction, great. We get paid out and the new person takes over the property. If it doesn't sell, now we get the property back on our books as an REO. Yeah. And that's where the process is, that we have to find a realtor. Now we can go in the property if it needs cleanup or work. Now we have to bring in a crew to do that. And
and now you know why banks don't do that. Right. And then part of it too, it's if there's a non-performing note, we could actually offer that the homeowner cash in order to walk away from the property, and we don't have to go through that process, because cash for keys, and it doesn't affect their credit. So less than a year, whenever they get back on their feet, they could actually go and buy a home again. So it benefits them to walk away from the property. So before we actually buy a note, that's when we do our due diligence. Like, okay, what is our strategy? Yeah. Right. And if this happens, what are the next steps? And then now there's always 2 or 3 different options that we have. Yeah. Again, as a lender, you have that advantage of the borrower. And I think a lot of real estate people don't understand this side of it, just because they're always dealing with the borrowing side. And that's okay, right? To build up. But once you accumulate a certain amount of wealth, that's when you want to diversify into other asset class. That's why note investing is definitely a good place to be in.
Being the bank is always a good idea, historically.
I love it. Well, I'm sure learning a lot about notes. That's really, really cool, you guys, because I didn't know much about it. Now, I have a question for you. Can note investing be syndicated? As August and I syndicate multifamily, can you bring on a group of investors onto a note?
Yes, it can. Right now, we're actually helping out our mentor, a good friend, raise capital for a fund that he's putting together for note investing, right?
Buy notes.
Syndication, it works as well with notes. I haven't really dealt with it myself.
Yeah, we're not too familiar.
Not too familiar of the syndication part, but I know in the fund, you could actually do that with notes.
Very similar. Funds and syndications are very similar. Funds continuously raise so if you're purchasing a pool of notes, you could do it through a syndication process, meaning that you bring a group of investors which invest into a fund, which the fund then purchase these notes, and then your team goes through a process. Taking a step back now, thank you for that. Great question, by the way. Taking a step back, when you're purchasing a note from an institution, for example, let's say a bank, are you required to pay fully cash for that entire note? Can you also finance that note? Or what is the process of purchasing?
Yeah, no, you pretty much tell the bank, I'm interested in buying a pool of notes. As soon as they have something available, they'll send it to you, and that's it. Within less than 7 days, you have to put all the cash to buy the pool.
Oh, wow.
They want it off their books as soon as possible. So no.
Or if you're just buying one note, then either way, you have to have the cash to buy that note.
You have to have the total capital to buy, the full number of the amount that's owed on the notes that they're selling it for.
Exactly. Mhm.
Okay.
Now I have
okay.
now I have a question. What kind of returns do investors make when you guys?
Well, it's anywhere from single digits to double digits.
Okay.
And some of the returns that we've seen from not just us, but other people around us, they're kind of scary. If we throw that number out there for you guys, like, what? You're lying. But again, everyone has different strategies. And what we see that some people could benefit the most is in a non-performing note, just because we get it at a deeper discount.
Right.
And the higher we go up to connect with bigger banks, the bigger the discount. That's why it's always a benefit connecting with large hedge funds and big banks because of those reasons. But again, like we mentioned previously, you have to have a capital in order to pull the trigger, right? And a lot of people are not in that place right now, right? They might just be, setting up a fund, or they already have certain investors ready to deploy some capital, but not to the larger scale. So that's to answer your question.
You need to have liquidity in place to be able to then get involved and purchase these notes. Now let's discuss. So me and Ava, we run a real estate investment company here in Vancouver, Canada, which focuses on buying assets in the U.S. In the Sun Belt states. So in a way, we're somewhat of a remote investor. We utilize the assistance of what we call regional asset managers, or boots on the ground per se, who oversee the property for us. They oversee the property management, are involved in the underwriting process, physical due diligence. They're basically our boots on the ground. For yourselves, how do you structure that process? Are the projects you're looking at are in your vicinity where you can drive, feel, look at the assets? And if yes or no, now if it's in a different state or a different city, do you utilize the assistance of a third party person who can go look at, like, what does that process look like? If you can tell us more about it, please.
Yeah, no, we don't invest in California. California is very, very expensive. So not very many investors like to invest in California.
Or New York or New Jersey.
There's nothing wrong with the States. We live here. We love it. But it's just capital-wise, it's just too expensive. But yeah, we have the same process where we bring in third-party companies as far as for boots on the ground, just checking out the property. Because overall, we're buying the paper. We're not, buying the property, but we still want to know what it looks like, how the property's been taken care of, what the area looks like. So we do, we'll bring in real estate agents from the area to give us what we call a broker opinion, to tell us, hey, what is the property made worth if you had to sell it? What does the area look like? Because we'll talk to local real estate agents.
Right.
Like, what's the area look like? Those types of things. Unfortunately, because we're buying the paper, we can't get into the property, legally. So we just have to, look at the outside of it and look at the numbers.
Got it. You create a team. You basically have a team. If you don't have a team, you go and actually develop the team needed to
become that area. Yeah.
Right.
Yeah. Absolutely.
A lot of us in our industry, and you may have even heard of them, we reach out to Dickie Baldwin at Baldwin Advisory Group. He has a lot of connections in a lot of different areas. So he helps us a lot with that kind of stuff.
Awesome.
In the surface level, like, we're doing similar due diligence, but then again, we're more focused on the paper. So we want to look at that legality, right? In case we have to take this property back, what do we need to do? What is the return? What is the balance? How much is the property worth if we're going to take that, property back? And then again, having that connection with a real estate agent. So if we go to that process and it doesn't sell in an auction, or we do cash for keys, we already have a real estate agent in place ready to just sell that asset.
Right.
So,
Now we have a good question from our good friend Daryl. Are these always single family residential, or are there multifamily, commercial, or industrial?
Oh yeah, there's single family, small commercial.
Yeah.
I mean, hotels. I mean, you get a lot of different.
We've seen notes on gas stations. So anything that there's a mortgage on, you can buy a note. Yeah.
Okay. So in our business, the multifamily realm, there's always certain metrics that are so important. For example, the IRR, or if the cap rate, or if the, you know, how the property is cash flowing, and the NOI. What are the metrics you guys look at when you receive a note? So let's use that $100,000 note that now you have to pay $100,000 to purchase that note. Now, do you see the difference between that amount of the note and what is the property currently appraised at, or what is the property current the value of the property, and at that time you make the decision? And is there certain number of difference between the note price and the value of the property, or also the assistance of real estate agents you use in that area? What are those numbers like? And we'd be interested in hearing that.
We look at all those things. We look at how much is owed on the property, so the note, how much the property is worth if we have to sell it on the open market. We also look at how much of a down payment the person put down. Some people in our industry also look at the credit worthiness, as far as the credit score of the borrower. Us, we don't care, because it doesn't matter. If you're going to pay, great. If you're not going to pay, great. Either way, we're going to figure out a way to make this thing work for us.
Got it.
So we do look at all of those things as far as when it's residential. Commercial, the exact same things you guys look at, we look at when we buy a commercial note as well, because those are important. Because if we end up with the property, we need to see how the property is performing.
Got it. That makes sense. So now I guess if you guys go through the process of the court process and take over the property, and other properties in your name, but you still have this, now it's clear title when it comes to your name, correct? Because you've purchased a note on it. At that time, do you go through the process of refinancing if it's a type of property that you're looking to be involved in, or kind of a legacy asset? Is that an option, I'm assuming, that exists as well?
Yeah. I mean, we can, but it's just part of the strategy initially. What do we want that return on investment to be? If our goal is to take back the property, then let's make that the goal initially. But if it's not, we got to calculate those numbers. Like the reason why we modeled our business after banks is because, I mean, the banks never lose, right? And they're always making money. So we're like, if the banks are always, getting that cash flow, then we should model what we're doing after that. Why aren't they rehabbing? Why aren't they flipping? Well, there's a reason for that. We just talked about some of the legalities, some of the groundwork that they have to do. So we want to be focusing on the same thing. That doesn't mean that if, Shaun wants to leave California and get a note in Georgia that's not performing, and he wants to leave me, that's a different story, right? But other than that, that's pretty much like what we model our business after. Yeah. Just how banks operate.
Great answer.
Well, we're experts on note investing now.
Experts, but it's definitely very interesting. So no, I would like to continue to learn more. So definitely add us. So now let's talk about your group, your brand, yes, your concept. Obviously, you guys are newer to the space, but I'm sure you're looking to, as you're on our YouTube show, you're looking to kind of expand your database. What is your process to bringing on potential investors or partners? And is there a process in place you've put where you're nurturing those leads or contacts? Are you sending out newsletters or other content? Kind of talk to us about your vision, and if you have systems in place, or if you have any kind of visions about plans you want to have in place.
That would be great.
Yeah, we actually just went through a whole restructuring of how we're reaching out to people. As you know, we have our podcast and we have our YouTube channel.
Nice.
And we were like, okay, how do we continue to nurture people through this process? Our mentor has his own coaching group that we're actually help him coach students that he has coming through his pipeline. So when someone wants to learn more about note investing, we kind of direct them that way, because we're involved in that to a certain extent, but he already has a whole model together for coaching if you really want to dig in and learn note investing. For just those general people that just want to learn it so they can invest in notes, we like to direct them to our YouTube channel. Once they've subscribed to our YouTube channel or on our website, we have a ebook as far as the basics of note investing. Once once they go there and sign up for that, they're in our funnel. they'll start receiving monthly our newsletter. They'll start receiving, emails every month, just, talking about a short topic on note investing. If they want to know more, they can always pick up the phone and give us a call as well.
Because we always tell people you have to really understand what you're doing. Even if you like the strategy, you know a little bit about notes, you really have to understand, just because we don't want people double-minded saying, I invested in notes. Whoa, my gosh, it became non-performing. What are we going to do? Like, they lose their mind.
Yeah.
We don't want investors like that. We want investors that are a little bit savvy, understand the risk of it. Because again, for everything that you do, there's going to be a risk. There's going to be a risk me leaving the office and driving home. There's always going to be a risk, right? So we want to make sure they really understand note investing, performing, what happens if it turns non-performing, because at the end of the day, again, we really want to get savvy investors.
Yeah. And we want people to feel comfortable overall. We don't want them to lose sleep like most people are losing sleep in the stock market. We don't want that. Now it's like, what, man, I had 100,000 in there. Now I got $2. What's going on? That's not what we want. So
that's fantastic, you guys. Like Warren Buffett says, never invest in a business you cannot understand.
Yes, exactly.
You guys are doing a great job on that.
Yeah, and now quickly, a question comes up here. So when you're talking about the people you help with understanding the basics of note investing, this is more on the active side. Do I have a right if somebody wants to be actively involved in note investing? Do you also partner, or do you also advise or send information to people who want to be passively investing in note investing? Can they use this? It's like, for example, we're the active operator people invest through, and we do all the work where they're just passive. Walk us through both of those, if both exist, on the passive investing side and the active investing side.
Yeah, I mean, both of them. Yeah, we want to definitely take that approach that they understand. As soon as they understand, they're really comfortable. Then we'll talk about how we can partner up together in a notes. Again, now that we're going to help our mentor raise capital for the fund, obviously that makes it a little bit easier, right? Because they could just put their money to work in that fund. But other than that, like a person that's just trying to get their money out of the stock market and invest in notes, we could have a conversation on how that looks like. Do you want to partner? Do you want to just invest yourself, right? Or do you want to invest in the fund? So there's different.
Let's do a case study. Sounds good. Let's do a case study. Let's say I want to invest. I'm here in Canada. We don't have note investing here. And let's say I want to invest with you guys, on one of your projects that's coming up, or on this concept. Is there a minimum investment amount? What are the terms? What kind of recourse do I have? Kind of walk me through it, for that process, if you may.
Minimum investment to get a good note is about 30 to 40,000. That's the one thing we tell people. So if you're just coming to us and you want to invest in a note, that's the minimum investment. But before that, we want to know, what do you understand about note investing? We want to know that you understand what you're investing in. So we're clear on that. You feel comfortable with it. That's okay. This is the minimum investment is 30 to 40,000. Okay. The recourse, when we buy a note, if we're partnering, we do more of a JV, but that person has some responsibilities, because we have parts of it that we have to do, due diligence, things like that. So if we're going to partner, we're still going to have you do some of that as well, because we're both partnering together. So we both have to do a little bit of the work. If you want to be completely passive, that's where we're like, okay, well, we have our fund over here. This is what we do. This is your preferred return. And this is what, your other return is, depending on how long you stay in that fund investment. So we have a couple of different ways you can go.
Yeah.
And that 30 to 40,000, if I'm investing on one note with you guys on this kind of case study we're doing, now there's obviously cost that goes into the legwork that you guys are going to perform to if it's performing, to get in touch with the homeowner to make sure that they can continue paying on time. And if it is non-performing, now there's legwork where you have to find the homeowner. There's also process with legal costs to have it transferred to our group's name, and then eventually sell the property. Is the cost for that process above and beyond the 30 or 40,000 you mentioned? And who is that cost paid by? Is it paid by both of us? And how does that work?
Yeah, so we partner up. It just depends on what we talk and we discuss, what we're both comfortable with. For a performing note, there's not much to it, right? You buy it, slap in the books, forget about it. You just collect a check.
Yeah.
That's what it is. Like you have a retirement account, just leave it there. Let it accumulate, right?
Yeah, the servicing costs on a performing note
It's
is
like
about
$50 bucks.
$15 to $20 a month.
I said $50.
Yeah, it's like $15 to $20 a month. Honestly, that's what we pay on any of our performing notes, and that's it. That's your cost every month.
And for a performing, non-performing note, that's what we calculate.
Mhm.
Okay, this note is worth about $30K. We're projecting lawyer fees and everything else, go up to $35,000, $40,000, whatever the case. We look at those numbers before we proceed in actually making the purchase.
Yeah, and if you want like a raw estimate, it's usually 3 to 5% of the note cost. As far as the cost you put in to buy the note, add about 3 to 5% to that. That would be the fees.
The fees associated with getting the property in our name on a non-performing
Legal fees, things like that, going through that process.
5%.
Got it. That's very interesting. I would,
Yeah.
we want to have you guys on again on our show as you get more involved and you grow your platform. It sounds very interesting. I'm interested to definitely invest.
We have some more.
Got August's attention.
I'm good as long as I can.
Yeah, exactly. That's what I'm saying.
You guys do all the hard work and I can just sit back and invest. That's what I like.
Done.
When I connected with Shaun and then our now mentor Desi, he's talking about being the bank, and I'm here like, okay, so are we in real estate? Are we doing real estate? No, we're a bank. I'm like, okay, so the asset, the collateral is the mortgage. I'm like, okay, now it's sitting in. Okay, so it took me a while to really grasp this because I never saw it again from the other perspective of being a bank. So
for me, as always, that was always my question to Desi was like, wait a minute, so all these real estate people that we're around on a daily basis, no one's investing in real estate or no one's investing in notes.
Yeah.
Why? Because they don't understand it.
Right.
But in actuality, they're all in the note investment arena. They're just working on the other side of it.
Yeah.
And that's
I don't have a dollar bill here to show you guys, but in the American dollar bill, it has a note. It says note.
Yeah.
Oh, really?
It's a promissory note.
Yeah.
We'll check that out.
I think they're in Canada. So
Look on the back of the
currency,
dollar bill.
but-
It says, promissory note.
Okay.
Federal Reserve note.
Federal Reserve note.
There you
Yeah,
go.
but the note used to be, the US dollar used to be backed by gold, but unfortunately that note is no longer backed by anything. And that's why real estate is a great kind of hedge against.
That's another conversation.
That's a whole nother
That is
conversation.
another conversation.
That's why I had to laugh about that. I'm like, we're not gonna go into that.
That's a sense. Yeah.
We have another
Looks like
question
we have
here.
another question, you guys,
What's
from
up?
our good friend Daryl again. What is the typical timeline between when you buy a non-performing note and when you get your return? You cash out or sell the property?
A great question.
Great question.
Usually anywhere from 12 to 15 months.
Oh, wow.
12
That
to
long,
15
for that
months.
process. And that is in,
And it really depends on where you buy the note. Texas, it's like 6 months most, because literally Texas, you can foreclose in 30 days.
God bless Texas.
Like literally, you can foreclose in 30 days.
got it.
For other places, it's a longer process.
Got it. And I'm guessing there are lawyers, attorneys who focus on these. So when you need to make that process, you just go to the person who does these every day, and they give you a better price because they're your basically they're focused in this kind of concept of note.
Yeah, but basically, with us, our servicing company can secure an attorney for us. To be honest, the servicing company can take care of all of this for us.
Great,
Okay.
great. So
Yeah.
that third-party company that you use, similar to the property management we use,
Yeah.
does most of the work for you. So it's
That's exactly it. Servicing
Exactly.
companies are property manager.
Yeah.
Yes.
There you go.
That's cool.
Great.
There's so many people in the multifamily game, and these guys kind of are, in
Different.
the US, in
I love
Canada,
it.
there's not a lot of people in the multifamily, but in the US,
yeah,
these
you
guys
got
are,
me sold. So if
Yeah.
you
No, and
What-
that's why I quit my job about a year ago. When I talked to Shaun, I'm like, I went on YouTube, I went on Google, I went searching for different businesses. Now I'm like, man, like with all my experience in social media, transportation, all that stuff, and his experience, I was like, it makes sense, right?
Came
And the little time that we've been out there, just in social media in general, we get in contact by a lot of, individuals that have been in this space for a long time, looking up to us, asking us for advice, asking us for, to do business together. So
that's a good thing about the thought leadership platform. Hey,
Absolutely.
where you guys
Absolutely.
kind of put yourself out there and educate.
absolutely.
Good
And
for
another
you.
thing is also the focus. I really enjoy the focus William earlier said is that, hey, we're looking, we have a business model, we have a business plan, is looking to take over the property and then sell it right away. It's none of these kind of concepts of, hey, keeping it or adding value to it or doing what have you. You have a business model, you follow that. You have your experience from your jobs before, and now you've come together to do this. I love the concept myself personally. If you find a diamond in the rough, as Ava likes to call the multifamily we look for, I love to be on the receiving end of that, and get to know you guys more, and build that know, like, and trust, and for sure be involved in your group and your investments in the future.
Awesome.
So, yeah, really appreciate it. Would you like to? Maybe we can ask
for a passive investor.
well, just for maybe an advice.
What's your number one best advice you would give to a passive or active investor? Why don't we ask that?
Or somebody looking to invest in notes? What would be
Yeah.
your number one advice for somebody looking to invest?
I'm going to take it back to what Ava said earlier about Warren Buffett. Invest in whatever you understand.
Right.
If you don't understand, you don't feel comfortable, don't deploy any capital, right? Don't take that step. But once you understand what you're doing, feel very comfortable and 10x it.
Well said.
10x
Well
it.
said. Well said. Well said. Yeah. And just to add to that is, if you're investing with someone or a group and it's being opaque and it's too convoluted for you to understand, there is something wrong. Anybody you invest with, they want to be there, just like these guys who are there explaining their process. They have their social media platforms. They're available for a phone call anytime to explain, and they enjoy educating others and explaining. That's who you want to invest with. That's who you want to partner
Somebody
with.
who's like, I will not take your money until you are fully on.
Exactly.
Love that, you guys. That's
People have
fantastic.
looked at us weird because we're like, no, we won't take your money. Do you understand what you're doing?
And that was a hard concept for me in the beginning because, again, I come from a sales background too. I'm like, let's get it. Let's get it. Come on, deploy that capital. Like, we're ready to rock and roll. But Shaun's like, no, take it easy. Stop. So I'm like, all right.
And then people appreciate you. That's fantastic, guys. We really appreciate you guys coming on today. Thank you so much.
Yeah,
Thank you for having us.
Let people know how they can get in touch with you.
Yes,
We've
please.
added your LinkedIn contacts here to the Q&A, but for our YouTube, let people know how to get in touch with you, or your YouTube or podcast. Kind of give the names, if you may.
Yeah. For YouTube and our podcast, Cash Flow Generation.
Nice.
We should come up real quick.
Yeah.
And then for our LinkedIn, that's where we're more active. William Rodriguez, you already put the link below.
And Shaun Jones, same thing. Yeah.
And we'll add that on the YouTube. Where
For our website, it's cashflowgen.com.
Perfect.
That's where you can connect with us on our website.
We'll add that right below this video. So, hey, we really appreciate having you guys. We had a lot of fun. We want to have you guys on again and hear more stories and
Let's do it.
more stories of winning and 10x for sure.
That's it.
All right.
Thank you, everyone, for joining us
Thank you, everyone,
today.
for joining us.
We'll see you guys soon.
Thank you.
Everybody
Thank
take care.
you. Take care.
You guys have a good one.
Thank you.